Howdy, everybody. Welcome to Liberty Call for Friday, March 21st, 2025. Hope you're having a fantastical day out there. I apologize if my voice is a little gone because I've got some allergies that kicked up in the last 2 or 3 hours, and it's making me quite miserable. Anyways, all right. Well, markets are trying to close the week on a high note, and the S&P and Dow were poised to snap their 4-week losing streak, but there's no shortage of headwinds. FedEx shares are down 8% after weak earnings, and Nike is off 6% on gloomy sales forecast. And everyone's watching the calendar as April 2nd tariffs deadlines loom. Meanwhile, the Fed has held rates steady, and the chaos erupted at Heathrow as power outage grounded over 1,300 flights. So before we get everything started, if you could do me a favor, give me some thumbs up, a like, share, subscribe, follow, and press that notification bell. All righty. Let's get to the markets. God, my nose is itching like crazy. All right. Dow Jones was up 0.08%, 31 points, closed at 41,985. S&P 500 up 0.04, 1 point, closed at 56.64. NASDAQ up 0.52, 92 points, closed at 17,784. The VIX was down 2.58%. That's 1929. Canada down 0.37. Brazil up 0.18, and Mexico down 0.84. Headed over to Europe, Germany was down 0.47, UK down 0.63, same with France, Netherlands down 0.48, Spain up a third, Italy down 0.39, Switzerland down 0.24, and Portugal down 0.92. Russian exchange is red today, MOEX down 0.92, RTSI down 1.21, and the overnight markets, the Nikkei in Japan was down 0.2, Australia up 0.17, New Zealand up 0.06, and China, the Shanghai down 1.29, Shenzhen Component down 1.76, China A50 down 1.74, DJ Shanghai down 1.42, Hang Seng down 2.19, and the Taiwan weighted down 0.75%. All right. Let's bring up our chart, and we'll look at the markets for the week. Let's go to the weekly chart. Turn off my lines. All righty. So we'll start here. All right. So for the Dow, looks like it's going to be up by about 1.24%. The S&P 500 is going to be up about 0.54%. The NASDAQ barely up 0.2%. Dow Transport's going to be down a smidge, 0.65%. And the Dow Utilities, going to be flat at down 0.09. So, all right. Well, those are the markets for the week. So, not terrible. Let me put everything back the way it's supposed to be. Put it on the Dow. All right. Well, let's get to the data that came out this week. Starting out with initial jobless claims came in at 223,000. Forecast was 224. Previous number was 221. Continuing claims came in at 1.892 million. Forecast was 1.89. So 2,000 over forecast. Previous number 1.859. Retail sales year over year grew at 3.1%. Previous number was 4.2. And a month on month, it grew by 0.2%. The National Association of Home Builders Housing Market Index came in at a 39. Forecast was 42. Previous number was a 42. Housing starts on an annual basis came in at 1.501 million. Forecast 1.38. Previous number 1.35. So a bit of a pickup there. And on a month-on-month number, it grew by 11.2%. Last month, it contracted by 11.5%. U.S. building permits annualized came in at 1.456 million. Forecast 1.45. Previous number 1.473. And month over month, it contracted by 1.2%, which is not ideal. U.S. price imports year over year grew at 2%. Forecast was 1.6. Previous number 1.9. And export prices grew at 2.1%. Previous number was 2.7. Industrial production year over year grew at 1.44%. And month over month grew by 0.7%. And U.S. capacity utilization rate is 78.2, above the 77.8 forecast. Previous number was 77.7. And existing home sales came in at 4.26 million. Forecast 3.95. Previous number 4.09. And month over month grew by 4.2%. And lastly, the U.S. leading index came in at a contraction of 0.3%. Forecast was a contraction of 0.2. All right. Whew, my voice might actually hold out till the end. We shall see. Got about another 5 or so minutes left. All right. Well, let's get to the market recap. SP 500 cut some losses, but weak quarterly results way. All right. SP 500 paired losses Friday, but remained under pressure following a series of disappointing corporate earnings and mixed signals from the Federal Reserve. While the Fed held interest rates steady and maintained its projection for 2 rate cuts this year, its higher inflation forecast and downgraded 2025 growth outlook cast a shadow over the markets. So the Fed's playing a balancing act. The Fed expects inflation to remain above the 2% target, inducing doubt about whether planned rate cuts will materialize. And policymakers also noted uncertainty around the inflationary impact of Trump's tariff policies, creating additional headwinds for the U.S. economy. In a positive geopolitical development, the European Union delayed retaliatory tariffs on U.S. whiskey, a move seen as a goodwill gesture to allow more time for trade negotiations with Washington, potentially averting a broader trade conflict. Some disappointing earnings. FedEx plunged 7% after cutting its profit and revenue forecast, citing continued weakness in the U.S. Industrial economy. Nike dropped over 5% after missing revenue estimates. Micron Technology reversed early gains and fell over 8% despite strong AI-related guidance as investors sold into the news. And Lennar declined more than 3% following weak earnings as high interest rates and consumer uncertainty hurt home buying demand. So final takeaway, the Fed is still trying to thread a needle, but inflation and trade tensions may unravel their plans. Meanwhile, weak earnings across key sectors remind us the economy isn't AI-powered as Wall Street wants us to believe. All right. Let's get to our next article of the day. From Zero Hedge, U.S. recession risks not as high as the media suggests. This was written by Lance Roberts of realinvestmentadvice.com. So let's see what he has to say. All right. Recent market volatility and renewed tariff battles have reignited U.S. recession fears, with forecasters like Goldman Sachs and Moody's issuing warnings. However, Lance Roberts of Real Investment Advice argues these fears are premature and overblown. Despite a market pullback exceeding 10% intraday, the key economic indicators remain expansionary, not recessionary. The Federal Reserve's decision to hold rates steady while revising inflation upward and growth downward has added to investor uncertainty, complicating matters. Trump's renewed tariffs and retaliatory measures from China are raising questions about future inflation and economic momentum. Let's see here. Indicators like the Economic Composite Index, ISM Composite, and Leading Economic Index all remain in growth territory, while growth is clearly slowing, largely due to waning government stimulus and structural drag. A recession isn't currently indicated. The real risk may lie in earnings estimates. Wall Street is projecting double-digit earnings growth through 2026, but those forecasts are misaligned with slowing economic activity. Historically, earnings and GDP growth are tightly linked, and when they diverge, market corrections often follow. While headlines scream recession, the fundamentals don't yet support it. Economic slowdown, yes. Collapse, not yet. Investors should remain vigilant, assess earnings assumptions, and position for slower growth, not disaster. The soft landing may not be over, but it is getting bumpier. Don't fall for the noise. Follow the data. I certainly would agree with that. The data doesn't look great, but it's certainly not catastrophe. Not yet. All right. Last up from Zero Hedge, the imminent restructuring of the monetary system by Kane McGuckin via bombthrower.com. All right. The fiat system is breaking, and what comes next? The global financial system, built on leverage, fiat, currency, and financial engineering since 1933, is now creaking under its own weight. Author Kane McGuckin argues we're entering a quote-unquote controlled unwind, a deliberate but painful transition towards a sound money system, potentially featuring gold, commodities, and Bitcoin as monetary anchors. So for step one, ending the fiat derivative pyramid. Financial world has been inflated through paper gold derivatives and hypothecation, where multiple parties lay claim to the same assets. U.S. debt levels now at 123% of GDP, and Treasury fragility highlight the growing unsustainability. Foreign buyers are exiting U.S. debt, signaling a de-dollarization trend. A monetary restructuring is inevitable. Step two, signaling a shift to sound monies. Trump, Scott Bessent, and institutional players are quietly repositioning towards hard assets. Gold accumulation is accelerating. LBMA and COMEX shortages show the stress, and Bitcoin is rising as a potential hedge or escape hatch. Step three, centralizing FICC markets. In 2025 and 6, all U.S. Treasury and repo rates will be centrally cleared, purging hidden leverage and potentially triggering a liquidity crunch, similar to 2008 or 2023's bank failures. Bitcoin as a new gold. Institutional adoption, BlackRock, Fidelity, and MicroStrategy suggest Bitcoin is becoming a core reserve tool. A new cycle of rehypothecation may begin post-reset with Bitcoin at the center. A new Bretton Woods after inevitable market collapse, a multi-reserve monetary system may emerge, backed by gold, Bitcoin, and commodities rather than fiat alone. So the final takeaway, the global reset is already underway. The only question is, will it be managed carefully or implode spectacularly? Well, knowing the people that we put in charge, it'll probably be the latter. Either way, the age of fiat is ending and sound money is coming back, with Bitcoin likely in tow. Well, that is positive news for me because I get tired of the government deflating my currency and my wealth over and over again and putting, me and everybody else in a real, when things get more expensive, especially I'm a financial planner. I like to plan out the future. And when, you jack up inflation by 40% in a given year, that really doesn't help. All right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be happy to help. Hope everybody out there has a wonderful weekend. Hope my allergies get a little bit better, but it's probably just the trees and stuff outside anyway. So hope everyone out there has a great weekend. And I'll talk to everyone next time. Adios.